Thanks for joining us on the University of Auckland's MBA webinar. Today I'll be chatting with Dr. Hui Zhou, an expert on financial reporting, statement analysis and financial management, and with her is Dr. Yeguang, who specialises in empirical finance, investments and emerging markets. They are the course designers of the Waipapa Taumataro MBA Accounting and Finance course. Kia ora. I thought I'd start with the basics. What is accounting and why is it important?
If you think about any company, accounting does not have to be financial, but I think financial is important, obviously. And so if we think about any company, for example, Air New Zealand, most of us have experience flying with Air New Zealand. So you collect information in your personal experience, probably with experience of people you know. Mm-hmm. But those information is not enough for you to make business decisions, right? So for example, if you think about whether Air New Zealand stocks are a good buy or not, or if you're thinking about like Air New Zealand managerial perspective, if you want to make a decision about whether you should hire more staff, purchase more airplanes, kind of add new routes, things like that. Obviously, you cannot rely on information like just anecdotal or personal experience. So you need systematic financial information like revenue, profit, turnover, and you can do that in more detail, like break it down into different routes like North America, Asia, things like that. That will help you make decisions. So that's why it's important to have that information because again, it's systematic, high quality, and also actually whoever reporting that is kind of required by the law to report that faithfully. And also it's checked by a third party, which is what we call auditors. So the level of information quality is, I would say, is very high. And it's also open domain. So it's open to the public, totally free of charge. So it's like really a treasure of valuable information.
What is finance and why is that important?
So finance, I think, is a discipline that tries to understand capital markets. So plainly put, for a lot of people, how to make money and how to make money change the world. I think if you look at the two major disciplines in finance, one is corporate finance, the other one is asset pricing. So for corporate finance, it's about how to run a company, how to make profit, and in the modern world also how to meet the expectations of different stakeholders, how to, in a sense, make the world a better place at the same time as maximizing shareholder value. The second sub-branch of finance, that is asset pricing, is more related to the actual asset market. So people think about shares market, trading stocks, trading bonds, trading foreign exchange. And for that part, it's more about investment management. Yeah, so I think broadly put, these are the two main areas of finance. Yeah, I'm sure later on we'll also touch upon a little bit about the emerging areas, more green finance, ESG, those topics. Yes.
How do you approach teaching the complexities of accounting standards and the impact on, say, financial statements?
Actually, we try to strike a balance between the technical complexity and the business implications. And especially for the MBA program, which is designed for like the general business practitioners rather than specialists, our philosophy is that we try to make the complex standards kind of simple by making sure that it makes sense. For example, there's a new accounting standard on how to account for leases. And it's actually a quite complex change. So depending on which industry you're in, depending on what type of assets you are leasing. For example, if you're retailers, you're probably leasing warehouses and retail spaces. But if you're an airline company, you probably are have this long-term lease of those aircrafts. So depending on obviously different business, different the things are being leased, the standards are very, very different. And we're not going to cover everything. Rather, we give them the principle, like you know what questions to ask. So that's how we kind of try to strike the balance rather than trying to cover everything, all the technical details, which are impossible. Rather, we give them the principle and basically tell them what types of questions you need to ask based on the kind of industry and the tasks you are dealing with. So that's how we do it, yeah.
Do you look at case studies?
Yeah. So for my finance class, I think the most exciting part is actually to look at some of the recent cases, current affairs. So one thing that, for example, we teach in international trade and finance, traditionally we would focus on currency exchange, the foreign exchange risk exposure faced by corporations. But as you know, in the past, I'd say 20 years or so, a lot of the central banks, they've gained a lot of influence, not only in monetary policy, but you may say even in somewhat politically. Whatever the central bankers come out to say, people take notes. People have their eyes glued on the screen for that press release every 6 to 8 weeks. So these cases, I usually will bring some to the class. Sometimes we will watch a short videos about these recent current affairs and have a discussion and apply what we learn to understand what they are saying and why it is important, why people want to understand every last word of it.
How do you integrate financial reporting concepts into management decision making?
There are many examples you can do that. And one of the most, I would say, classic example is a DuPont analysis. So it's basically breaking down the performance into efficiency, profitability, and leverage, right? And in the current time, it's actually one of the most commonly used financial reporting tools.
Yes.
But it actually has a managerial accounting origin. It's called DuPont analysis because it was developed by the CFO of DuPont, I think, in the chemical company in the early 20th century. So that's actually a good example of how showing you how financial and managerial accounting are related. So it's a tool to help the managers understand the drivers of the performance, right? So it's not enough to know whether I have a good return on equity this year or not. I want to know what is driving it, because if I can understand the driving forces, I can make judgment about whether those forces are going to continue getting stronger, weaker, reverse. So it's a good example of how you can use financial accounting rules, tools to inform managerial decisions.
Can you give me an example of a real-world case where financial statement analysis significantly influenced an investment decision?
So earlier this year, we had Tesla kind of having their earnings released, and their stocks sliding quite a lot. I forgot, it's like almost a very significant drop. The reason is they show a decrease in their gross profit margin, obviously because they are cutting prices. And that really worried the investors because they consider Tesla as a premium brand, used to compete on like the concept, and they have a really high gross margin. So when they see the gross margin coming down, they start to get worried and people selling stocks. So that's a very good example of how new information about financial statements can really drive decisions.
Yeah. If I may follow up a little bit on that.
Sure.
I think financial reporting in many countries, jurisdictions nowadays are quarterly. So every 3 months, people want to see your numbers. Did you make money? Did you lose money? Did you do well for me? But a lot of the managers actually, they don't quite like it because it just promotes very myopic, very short-term expectations. And if you look at, I think, the late Michael Jensen, who is one of the most well-known financial economists in our generation, when he was the president of American Finance Association, he actually famously made a speech about the incentives of the managers. And in his speech, because he has a lot of industry exposure as well, and from his exposure, he said these managers are basically forced to deliver quarter after quarter after quarter, like sometimes unrealistic expectation by the investor. Just like Tesla. Is Tesla doing well? I think you bring an alien onto the earth, they will say, wow, this is a fantastic company. But this quarter to next quarter, investor could have very different opinions, right? This quarter they could be very bullish, and next quarter they're selling you off 20% a day. So that really kind of comes into the manager's head a little bit. And in Michael Jensen's speech, he even cited some example of it drives some manager to doing fraudulent accounting management. So I think that's quite counterproductive. And maybe that's something, I don't know, maybe New Zealand once a year actually is good. We don't have to report so often. Investors don't need to know how well you did in the past 3 months. Maybe once a year is sufficient.
Tremendous amount of pressure.
I think there's so to follow up on this. So there was this political debate about whether you want to have quarterly reporting, because most countries have like half-year reporting, like 6 months. But the US, because the stock market is so hungry for information,
Yes.
I guess it's very difficult to cut the quarterly reporting. But there is a term, I think it's coined by Hillary Clinton. It's a quarterly capitalism. Yeah. So like obviously people are worried about too short-term decision making. Yeah, so that's one thing I think the students, based on my experience, the students find really interesting is they think accounting is very mechanical, but it's actually a very rich process. You know, all sorts of forces, economic, political.
Yes.
And so there's a lot of advocacy, there's a lot of lobbying. So all these forces come together to shape accounting. So that is something that our students find a little bit surprised, but that's actually what makes it really interesting.
Do people who haven't come from a financial or accounting background, do you ever find them coming in and feeling a little bit worried about whether or not they'll keep up?
Probably similar to accounting. There are definitely those students. We've had students from journalism who has not touched any math classes or finance or economics class and who came into the class. So we kind of adapt really to the cohort.
Yes.
And I think our program has also inserted a lot of these prerequisite course. So they will get a chance to brush upon some basic mathematical models, Excel modeling techniques. So I think we're not going to sugarcoat and say you don't need to know math to do an MBA, or especially for accounting and finance. But we do our best to accommodate to those students' needs.
Yeah.
And it sounds like the combination of all those real life examples and looking at how things are impacted and influences, like the current affairs,
Exactly,
things you're talking
exactly.
about, make it relatable.
Yeah, exactly. And it's my experience is those students who are least familiar feel like they learn the most. So
Sure.
Because if they are now in the program, they probably will never touch this. And the feedback I got is it's kind of painful going through it, but it's really, really useful.
Yes.
And they talked about how it makes them more confident communicating with like different departments, and even make them more kind of, they feel like they can do a better job presenting, like asking for fund in their project. So maybe they are not in finance or accounting, but in marketing, but they have a new idea. They can better communicate, talking about how this will affect the different financial metrics to the board, to the CEO. So they actually make it, they feel like it help them to get fund for their project. So
Amazing.
I think that's really interesting.
Very empowering.
Yeah.
How do you address ethical considerations and challenges when it comes to investment decisions?
Yeah, so that's, I think, a very current topic in finance, and we do touch upon that. I think from the economic equilibrium perspective, it's really how the world is moving forward. In the Milton Friedman's last century, the shareholder primacy model, basically the company is set up to make money.
Yes.
The more money you make, the more successful a CEO is, the more bonus he can take home at the end of the year. But nowadays, as all of us have observed, you know, especially with social media, with internet, a lot of these questionable, sometimes fraudulent, sometimes unethical practice by the modern corporations will catch fire on social media. People will boycott you if you don't do it. So I think on some level, from a finance perspective, in the equilibrium, if you don't do good and people call you out, and enough people call you out, you will lose business. So in the equilibrium, almost from a money-making perspective, it forces you to do better. Yeah, but then that leads to even a more nuanced topic, which is these greenwashing, these multi-million budget for the PR department. So just because you look good on the internet doesn't mean you are actually doing good, right? Or are you hiding something under the carpet that you don't want anybody to see? Yeah, so we can go down the rabbit hole, but yeah, we will leave that for the class.
Yes, how interesting. What is meant by the terms sustainable accounting and climate-related disclosures for ethical financial practices?
Yeah, so this is an emerging topic, getting a lot of attention. But like I said, accounting is a system that, you know, kind of tracks, measures information, right? And so what you choose to track and measure obviously is a choice.
Yes.
It used to be the case that you only tracks and measures information that's directly related to value creation, like how much money the shareholders can make, right? The company can make. But like Yeguang just mentioned, as we are moving into, particularly more recently, the new generation, they have great concern for the environment. So the business do not exist in a vacuum. They have to respond to the general public, right? So that means when you make a choice of what information to keep and to track and to measure, you have to think about the information that you used to never have to consider. For example, your carbon footage, right? For example, how much you invest in terms of reducing carbon emissions, things like that.
Yes.
So those information used to be completely missing from the accounting system, but now they are being included. Again, that's a choice. I would say it's a strategic choice in response to particularly the new generation. Because if you are not doing that, you cannot recruit the top talents into a business, and you may have problems selling them, your products. So this is why accounting, I think, are responding to, again, the shift in the general public opinion.
It's very interesting how it's an internal context and an external context. What are some key investment strategies that you might cover in the course? Because I'm sure people are always interested in that.
Yes. So one of the two main disciplines in finance is called asset pricing.
Oh, yes.
So in the class, we will teach the students basic valuation models of stocks, of bonds, and also we may touch upon some performance evaluations of investment strategies. I think at the end of the day, investment strategy in our very tightly packed course, the students will get an overview, an introductory view. We're not teaching the students to go out and start trading tomorrow to become a millionaire. You probably have to take more of our classes to do that. But I think they will, the perspective of our teaching is try to teach them how to fish instead of just trying to give them a few fishes for however long we are staying with these students. So there's a lot of extra kind of course materials that we provide. So if a student's, and let's face it, not everyone will go out to Wall Street. Some people will have different aspirations in Korea. But for those who do, who want to make it to the very top in asset management business or who have a big personal portfolio to manage someday, then they will learn the basic ropes, but we'll give them enough to go on with. So even after they graduate, they can still keep learning with the kind of the foundation they built in our curriculum.
Wonderful. Yeah. How much of it is exportable? So with international students coming in and learning the investment strategies, all of the things that you're talking about, are they transferable skills?
I would say highly exportable because in finance it's basically the same theory, right, across the world. So when we teach it, we make very deliberate choice regarding kind of what companies we use as, for example, cases. Typically, we have a balance of New Zealand companies and international companies to make sure the students have a local understanding, but also exposed to like global setting.
Yes.
So actually, we try to make sure that we have some cases in each region. Like the U.S. is obvious source because all the textbooks are based on mostly coming from that country, but we very deliberately include countries like Southeast Asia or China, which are very important to New Zealand because we are in the Asia Pacific region. So I would say the knowledge highly exportable, and in terms of the exposure to the cases, we try to give them a balanced basket.
Beautiful. How do you see technological advancements like blockchain or AI affecting finance and accounting in the future?
Yeah, so blockchain, cryptocurrency, from the finance part, we usually cover it a little bit from the investment perspective. I don't think we will go into super technical aspect because after all, it's finance and accounting. But from the investment perspective, we do cover the emergence of the cryptocurrency, which is a sizable investment community by now. Lots of people, especially younger generation, they believe in these cryptocurrencies someday, perhaps even replace the fiat currency, right, as created by these governments. Yeah, I think the AI is even a deeper topic, and it's basically the industry is moving forward every day, right? The AI, as of today, is already a lot more advanced than the AI, I think, last year or 5 years ago. Yes. So we try to move forward with some of the coverage. Yeah. In finance, I think the AI industry, the AI application that is in the industry practitioners is definitely happening. So I think the AI part, we will see how it changes the finance industry in the asset management perspective. So far as I'm aware, I think the most fruitful application is actually in the textual analysis in the natural language model. So the AI can help us process a lot of data in finance. I think there's some report that claims actually 20% of the data that all these investment community uses are quantitative numbers. And the rest of it, which is becoming very applicable and very obtainable, accessible to the investment community, are texts. So that's why these days, the AI tools really is way more advanced than the last generation state-of-the-art textual analysis. Yeah. So yeah, I think that's my finance kind of perspective on those questions. Yeah.
If you found this interesting, feel free to check out the innovative and world-class MBA at the University of Auckland, where this topic and many other fascinating and important issues are explored.